G'day everybody, and welcome back to another episode of the Aussie Investing Machine live stream. Thank you so much for joining me this Sunday morning. Lots and lots to talk about this week, obviously. Had a huge sort of week in the market with the whole Gamestop saga. We've seen Wall Street investors really super upset about what's been happening. And I thought we'd go over a little bit of that to see exactly what's been happening in the market, why it's been happening. We'll go over short selling a little bit, explain that concept, have a look at how a company can be over 100% short sold. And we'll also touch on whether there's any opportunity left with that GameStop move. Personally, I've just set up my Self-Wealth US trading account, so I'm ready to go. Hopefully that gets finalized on hopefully Monday or Tuesday, but looking at the figures at the moment, it seems that there still may be some opportunity left, so we'll get into that. The other company we'll talk about today is BlackBerry. I've got some information on that, and then we'll finish off with some chat around ARK Invest, which was mentioned in the last live stream. A lot of people wanted to have a look at ARK and some of they've got sort of active ETFs and also index tracking ETFs, and the performance of pretty much all of them has been extraordinary. So we'll go through those, look at the advantages and disadvantages, and we'll also go through their top holdings. I think certainly some of their top holdings could be some good stocks to watch. So we'll do all of that. Again, thanks for joining me. We'll get into it very shortly. Morning, Pat. How you doing? Good to see you here. As always, looking forward to your questions. Krez, good morning, mate. Hope you're well. Hope you've had a good week. Let me know. Have you been dabbling in the US stock market at all? Be good to know. As I said, I'm certainly considering doing that myself. Nicholas, let's go BlackBerry on Monday. Well, we will see. I've got a bit to say about BlackBerry, and it's not all positive. So be good to have a chat with you here to see what you think when I do get into that. But yeah, some interesting stuff. I'm certainly more bullish on GameStop than I am on BlackBerry. So Joan, g'day, good morning. How are you? Hope you've had a good week and ready for next week. It's going to be a massive week of trading, so super excited to get into it. Let me switch into the presentation for today. I'll just get that up for you guys. Bear with me. Alrighty. Make that a little bit bigger. Alright, here we go. Live stream number 7. Let's jump straight into it. So the first stock to talk about is GameStop. Probably heard a lot about this during the week. Maybe you've heard too much, maybe you're sick of it, but I still thought it would be interesting to go over what sort of happened in the last week, why it's happened, and then go over a few of the details and if there's any opportunity left here. So we all know GameStop was pumped up by a community on Reddit called Wall Street Bets. The stock was short sold by 140%, and this really got some people interested in trying to, I guess, outplay Wall Street. So what is a stock short? It's essentially when you borrow stock, sell it immediately in the hope you can buy it back for a lower price in a given period of time, and then give that stock back to the person you borrowed it, and you pocket the profit. The easiest way to explain, for me, it's a little bit hard to get my head around, but the easiest way I think to explain it is, say you're in the market for a small car, maybe a Toyota Corolla, for example, and a Toyota Corolla is going for $10,000. So you go to someone and say, hey, I want to short the Toyota Corolla. So you go and borrow a Toyota Corolla from your friend and you pay them for it. So you pay 10 grand. but you know there's a recall coming up in Toyotas, or you've got a suspicion, let's say. So you know there's going to be a manufacturing defect that's going to come up. So you get this Toyota, you sell it straight away for 10 grand, and then you wait. And then a manufacturer recall comes up and people are going, oh, are they that safe? What's going on? And all of a sudden the market price of Toyota Corollas drops, and you can pick one up for $5,000 with the same kilometers, same year, everything. So you jump on that straight away, buy a Toyota Corolla, same color that your friend gave you for 5 grand, and then you turn around to your friend and go, oh, here's your Toyota Corolla back. And essentially you've made a 100% profit because you've bought it at half the price that you borrowed it. So that's what's been happening. But how could it be shorted by more than 140%? And this is to do with the fact that sometimes they run out of float stock. So float stock is the amount of shares that are on the market that can be purchased or borrowed. So say I've borrowed that Toyota Corolla, and the guy I sold it to initially for that 10 grand also had the same idea. He thought, oh yeah, I reckon I could make the same profit on shorting this car. And so he also buys it off me, but he actually borrows it, say he gets out a loan or whatever it is. All of a sudden he's in the same position. Person who lent it to me doesn't know that. So it's a cycle of borrowing, essentially. So what happens if you get reborrowing? Or you can have a short sold ratio of over 100%, and that's what we saw. So it just means that obviously the hedge funds couldn't get enough of GameStop. They thought it was all going to tank. So you've got guys borrowing and then other guys borrowing off them. And yeah, Wall Street Bets has gone, this is a perfect opportunity. 140% short sold is huge, guys. You've got to realize this. If we look at on the ASX here on market index, you can easily go popular pages and you can go ASX short sale data. Click on that and it shows you the biggest short sale positions on the ASX. So if we come down, we can see here that Webjet is the most shorted stock on the ASX. This is the one that most people think is going to head downhill, and it's 14% shorted. GameStop's 140% shorted. So that's just a glaring opportunity, and it's no surprise that someone in that Reddit community has picked up on it and said, look, we've got an opportunity here. If we band together and all buy GameStop, we can drive the price up so that no one can sell what they've borrowed for less than what they paid. And that's what's happened. And if that price of the car that you bought or borrowed for 10 grand goes up, you've got to pay the difference. And that's the way it is. Or you can wait for a longer period of time in the hope that it drops. However, you've got to pay interest on that borrowing. So yes, you can wait. And this is what this column here, the days to cover. And that's essentially how long is left until we're expecting the majority of the people who are shorting this stock will need to buy back for them, hopefully at a reduced price. But this is the thing, if you waited until this days to cover was really low, maybe there's nothing on this page, but say it was only a handful of days, that's when you'd start really pumping the stock, catch them off guard, and all of a sudden they've got no option. They have to cut their losses and either buy back or they wait. So if we look at GameStop here on Market Watch, website for US trading, it's not as good as Market Index, but it does the job. If we look, we can see this 1 month movement. It's sort of rebounded back up to 300. There was a bit of a dip. It might have been people taking profits, whatever it is. Now GameStop started on 140% short sold, but if we look at what it is now, still 120% shorted. So in my opinion, there is still plenty of opportunity left. There's all of the float stock is still shorted, and it's just a matter of time until these people will need to buy it back. They'll be hoping that there's a dip, but if the retail investor continues to buy GameStop, then you're putting more and more pressure. So I think over the next week we will really see how this plays out, and I think this could go a lot higher. Obviously, I'm not a financial advisor, and this is not financial advice. So please do your own research and only make investment decisions that you've run past a licensed financial advisor. But honestly, I think at that percentage of short floated, I heard figures during the week that it was down to 90%, and I'm not sure how accurate this is. It would probably be worth trying to find some more details here, although with all the commotion that's going on and the hedge funds being so unhappy with what's happened, I wouldn't be surprised if there's a little bit of smoke and mirrors regarding this percentage of short floated. It could be the case that they're trying to keep it under wraps and not let people know their real position. It remains to be seen. So yeah, I think I'll be active maybe with US investing on about Tuesday, and I'll reassess then, look what the price has done, and then check out the Reddit community and see if people are still piling in. Could be an opportunity to make a little bit of cash, but we'll see. It's dangerous, and it's speculative for sure. However, we'll get to BlackBerry next, but it's a very different scenario. I'll jump back to the presentation. I'll just see what you guys are saying. Joan, how can you sell more than the total amount of supply? So yeah, that's the reborrowing. So if I'm shorting a stock and I've borrowed it, but the guy who buys it from me when I initially borrow it and you sell it immediately, if they're also planning on shorting the stock, that's how you can have that more than 100%, because it's like a chain of borrowing. It just goes down the line, and that's dangerous, and that's why we've seen this happen. Nicholas, 1,100 shares of BlackBerry, currently 17.96. Oh, is that what you bought? Oh, yeah. I'll come to that. Joan, you can't buy GME anymore. I don't believe so. I think you can. Just depends what platform you're using. So if you're using Robinhood, potentially no. I know they put the brakes on it, but they might be opening that back up. And Stake, I heard a lot of upset people who use Stake Invest because they couldn't purchase Stake. The platform was down or something. Whether or not that's a coincidence, I'm not sure. Certainly seems like it was organised, but that's, again, I've got nothing to back that up. So yeah, but I'm using Self-Wealth. That's my broker, and I didn't realise I had to apply to complete US trading. So there is a bit of an application process. It takes 1 to 2 days, and I did that on Friday. So hopefully I'm online, maybe on Monday, but most likely on Tuesday. And then I've got to get some US cash. So that could take a little bit more time. Could be instant, we'll see. But certainly by midweek, I'd hope to be ready to perhaps take advantage of some of these moves. We'll see. I'll jump to the next slide, which is on BlackBerry. So when we look at the performance, first of all, we should probably go over, what does BlackBerry actually do these days? We know what they used to do, and that was make pretty popular smartphones. But these days, if you go into a JB Hi-Fi, you're not going to see a BlackBerry. But if we look at their website, you can see their phones. They've got the Key 2, which is reminiscent of their older design. BlackBerries were always known for their great keyboards. Before, on-screen keyboards were very good. They weren't capacitive touchscreens. They were the old pressure-sensitive style. and yeah, pretty horrible to use. So BlackBerries had slide out keyboards and fixed keyboards, and people really enjoyed typing on them, and they were very secure and still are. And I think the White House used them for a long time. They've got a few Android phones here we can see, but certainly I've never heard of any of these. Looks like they've got a little what do they call these? To get away from technology, you buy one of these phones. You can still take calls, but you can't get on Facebook and that sort of thing, and it's a bit of a trend. Not a bad idea, but really none of these are notable products. Certainly not seeing them in retail environments, at least here in Australia. So yeah, product lineup, not so good. What else are they doing? Yeah, perhaps some other things. However, when we look at their financial performance, for the past 7 quarters, they've been going backwards. Their equities up and down. They're not profitable. Overall, really poorly performing at the moment. When we look at the short sold percentage on BlackBerry, which we can do again on Market Watch, remember GameStop was still 120%. Well, BlackBerry is only 7% shorted. So for comparison, we saw, Webjet 14, Tassel 11, Mesoblast. So it's about the same short sold percentage as A2 Milk. And honestly, A2 Milk has far better, in my opinion, long-term prospects than BlackBerry. BlackBerry's been squeezed out of the market. There's a lot of much better mobile phone manufacturers. A2 Milk, on the other hand, there's not that many milk manufacturers who can compete, especially with their special formula, with that A2 protein. A2 Milk's been growing at 30% every year for the past, 5 years plus. So they've had strain on the company because of COVID-19, but I think we're due to see their next results, their interim results at the end of February. And if they're positive, this will come back up, I believe. So I'm not sure maybe this is a hangover from COVID, but I wouldn't be shorting A2 Milk. I'd be shorting BlackBerry. So what I'm getting at is BlackBerry price has been pumped up. Investors have been caught up buying poor performing stocks, thinking that, the hedge funds are invested. And yes, it is 10% short sold, or just under, but that's not on the same level as GameStop. GameStop is really unique in the fact that it was 100% short sold. And when we look at what's been happening at BlackBerry, everyone, or mostly everyone who's a major shareholder, has been dumping stocks. They've been selling like crazy when this pump happened, because they know that the company perhaps doesn't have a bright future. Whereas GameStop has actually got quite a good business case. There's some fundamental analysis, and that's a lot of what drove this initial investment. It wasn't Wall Street Bets wasn't doing this. It wasn't a blind bet. GameStop's management team has been completely reshuffled. They're looking at selling online, getting into e-commerce. Overall, the future outlook for GameStop is quite positive. We're yet to see any material changes, but it certainly has some future that could be worthy of investment. And I think that's why people were willing to get around it. And certainly the negative press around GameStop, I feel a lot of people thought that wasn't warranted. And therefore you had these two things. One, the stocks shorted so much and it was disproportionate to their future performance or potential future performance. So people saw this, if I invest, it actually could go well. I'm not putting my money into a dying ship like BlackBerry. So there's the potential of doing well, and then there's the potential of squeezing these people who have shorted the stock, and that made it even more tantalizing, and I guess people were willing to get around GameStop. Is GameStop worth $300 a share? Probably not that much, but it's worth more than what it was, which was $4 or $5, I think, when this started really moving. Wouldn't be a bad long hold, in my opinion, if you got in at $10. But now, be careful about buying at 300 because they're probably not worth that much at this point in time, or even in 12 or 24 months. But there's certainly more opportunity if you had gotten in early, as goes with everything, I guess. So we'll just see what people are saying. Not a phone company anymore. Yeah, fair enough. They've got a few phones listed on their website, but Nicholas, BlackBerry is doing software in cars and now in talks with Amazon. Yeah. GoFlow, BlackBerry is an undervalued software company. Am I trolling? Well, look, I can only focus on their financial performance. So, and we can do that. If we look at BlackBerry here, we can see their revenue is done. It's a huge fall over the past 5 years. And then we look at net income after tax. It's all over the place. They had 2 positive years in 2019, 2018, but only just. And then current year, they're not making any money. And their earnings per share is negative, which obviously if they're not making any money. And then their equity, which you can still grow if you're not making a profit. If we look at their total equity, it's fallen. It used to be up around this 3,400, and now we're down to 25, 29. So I'm not discounting that they may have a software future, but they're yet to prove that, and it's not translating into financial results at the moment. And that may be because they're transitioning away from devices into software, and perhaps there are some people who see a bright future for BlackBerry, but this is their website, and the first thing on their website. So what have we got? Endpoint management, security, secure communications. Yep. Okay. So they're not, fair point. They're not focusing on their mobile devices, which used to be their primary product. So yeah, okay. It does look like there is a little bit more of a focus on the software side of things. So without having a detailed look at their investor presentation and their outlook, it's hard to know, but their financial position at the moment is not very strong. So, and yes, you might look at a long hold of BlackBerry if you are bullish on it long term, but I'm just saying the quick pump up we've seen of the stock is not going to have the same effect as GameStop because of the low short sold percentage. So I think that, and we've seen this heavy selling from executives, so I'm not sure how else to explain that. GoFlow, yeah, no debt, true. That's true. Let's have a look at that again. Balance sheet, no long-term debt. They do have some total debt. Other liabilities, yeah, so there's some non-current liabilities there. There's a little bit of debt, but if we look at I wonder what their cash position is. So they've got more debt than cash. Their current ratio is not good either. They don't have any coverage, so there could be something I'm missing, and if there is some material that I should look at, I'm more than open to. But from what I can see here, the current price squeeze on BlackBerry is not. It's been caught up in this storm of trying to, short squeeze, but I just don't think the opportunity's there because the short sold percentage is so low. Pat, There are a few other Aussie stocks that have dropped as well that would be good to pick up at the moment. Talga. Has Talga come down? Let's have a look. Yeah, it's tailing off. Fair enough. Where is it sitting? Let's have a look compared to the moving average. Alrighty, 1 week. Yeah, so still sitting quite far above the moving average. Let's have a look at the MACD. Yeah, so we're just starting to enter into a period of sell-off or oversold conditions for Talga. So Pat, in my opinion, I'd be waiting because we're expecting some selling to start and this price to move closer towards the moving average. So I'll just be patient and wait to see what happens there for sure. That's the way it's looking at the moment. Okay, so let's go and have a look at the final part of the presentation, which is ARK Invest. So this was requested by a few people to have a look, especially into their sort of innovation and genomic ETFs, which we'll do. So ARK provides ETFs, US based. They've got index ETFs, which are lower cost and they track indexes. And then you've got active ETFs, which are a bit more expensive to hold, but obviously there's rebalancing of the portfolio on a regular basis. The ARK ETFs and even their index ETFs are quite expensive compared to something like Vanguard. So if we have a look at one as an example, so I've got up here Genomic Revolution ETF, for example. We can see their expense ratio is 0.75, which is quite dear for an ETF. To make a comparison, here's Vanguard, Australian shares. Obviously, performance is nowhere near as good, but the management fee here is 0.1, so significantly less than 0.75. So that's one sort of point of comparison. However, you are paying more, but the performance is pretty ridiculous. It's very solid. So let's go through a couple of their ETFs. So we've got here the Genomic Revolution. So if we have a look at, look at this incredible growth. 1 year performance, 180%. Versus Nasdaq Biotech, which was 26, which is super respectable still. S&P is 18. So it's been a good year for the S&P. However, this is 10 times the growth. And if we average that out, since inception, 29%. That's over 5 years. So that's an awesome return. If you could lock me into 29% every year, that would be incredible. At that rate, your money's doubling every rule of sevens. Let's have a look. I'll tell you exactly. Rule of 70. So given rate, so if I pull up a calculator, 70 divided by 29. Yeah, so every 2.5 years in that fund, the amount you have invested will double, which is just incredible. So having a look at their top holdings, not a lot of companies here that I've sort of heard of before. And I think especially their top 3 holdings are certainly going to be topics of upcoming videos. If there's any in this list that you'd like to see in particular, let me know. But I'd really like to know exactly what these companies are doing. And yeah, number 1, Pacific Biosciences. Let's have a quick look at that. So biotech company, gene sequencing. Yeah, awesome. So let's look at their price movement. Yeah, just been going up and up. Look at that straight line. So that's the genomic revolution ETF. We have a look at another one. This is their autonomous technology and robotics. So still quite expensive. Huge market cap, great price movement, and we know some of these companies for sure. Tesla we know, Alphabet we know. I wonder if JD.com is the shoe store. I could be completely wrong there. Baidu, yep. So again, any of these companies, I don't know what Trimble is, and I don't know what Materialize is. So again, they could be ones to watch or ones to make a video on. If there's any in particular you're interested in, let me know. Since inception on this one, 25%, which is still very good. Genomic was looking better, however. And just another one here. This is their innovation ETF. Same expense ratio. Top holdings, so a couple of similarities. Tesla, Roku, I think they make those media devices for your TV. Square, a topic of an upcoming video for me. Square's like a payment device. Not profitable at the moment, Square. Spotify, some of these we know for sure. Some of them I don't, but this thing since inception, incredible. 36, that's just absolutely bananas. If we look at that again, rule of 70, your money's doubling every 2 years. So crazy stuff. We can see though, we've sort of had this massive blow off, which is what people are concerned about, I guess. Is this just the dot-com bubble all over again? It's certainly not typical price movement, and we're just seeing funds dumped into the S&P by the federal government, by the Reserve Bank. So yeah, yet to be seen, but wow, you only have to have been in this for 2 years with 50 grand in there, and now you've got 100. So can't fault these ETFs at the moment, but I'm interested in looking at their best performing stocks and maybe jumping in on a few of those as opposed to buying the whole ETF. Love to know your thoughts on that. But yeah, I think they seem to be fantastic. So any other points on that? So yeah, we've gone through some of the holdings, and I definitely think they'll be a topic for upcoming videos. Alrighty. BlackBerry undervalued software, yep, so we went through that. And we went through Talga. Well guys, it looks like that might be all for today. If anyone has any more questions, now is the time to ask. Otherwise, I might begin to wrap this one up. It's been an exciting week, but mainly dominated by all that's been going on in the US market. The ASX itself hasn't been performing particularly well. However, there might be some buying opportunities that come as a result of that. So if you've got any stocks you'd like me to look at on the next live stream, please let me know. And of course, yep, make sure to get those questions in now. Otherwise, I'll probably wrap this one up pretty soon. As always, thank you so much for joining me in this one. Really appreciate you jumping on. Really enjoy doing these live streams and having a chat to everyone. So yeah, appreciate it so much. If you haven't already, please check out the video I put up yesterday on Hazer technology, or Hazer Group, which is a hydrogen focused company. Looking really good at the moment. They've sort of got a lot of government funding, which is a positive sign, and it looks like they'll be ready to start producing some hydrogen later this year. So please check out that video. Krez, ComSec is advising up to 1 day to set up a US account. Now it's pretty good. Are you going to jump in on that one? 15 days. Yeah, that's a long time. Are you trading with ComSec at the moment? I find they're just too dear. Self-worth sort of half the cost, and you're not really losing much. maybe the insight on CompSec's a bit better, or you can actually get in touch with an advisor maybe. But yeah, self-wealth's been pretty good for me. So Pat, thanks mate. Yep, absolutely. We'll catch you all probably Wednesday 8 o'clock. We'll do another stream then, and hopefully I'll get a video out before then. It'll be a US stock based video, so yeah, we'll see what happens with that. But all right guys, I might wrap this one up. Thank you so much for joining me. Really appreciate you sticking around and asking all the questions. It's always great fun. So until next time, I will catch you in the next one. Thanks again, and I'll see you on Wednesday. Cheers.